no, this is really timely because I think what you're saying here, look, wake up because this is real. It is a problem. It's going to happen. And obviously there is an opportunity. And especially you talk about gold and silver. I mean, look at every other currency, every other fiat currency that prices gold and prices silver has been through the roof a lot, led the way higher. And I look at CNY silver, Euro silver. Forget 2011 highs in dollar silver. It's through the roof. It's just every day. It's higher and higher and higher. If anyone wants, to me, I'm saying to everyone right now, why would you not go after, swap some dollars for silver now? Because it's so clearly, it's your arbitrage. It's quite clearly undervalued. They've been sitting on it a long time. There's obviously a lot of short stops above the market. Otherwise, they've raised the margins on it by now. And it's a panic. So it's, to me, that's what I'm saying to people right now. What should I do right now? And I'm agreeing with you. Silver has to be a bargain.
Yeah, oh, absolutely, and I mean, there's absolutely no monetary use priced in it. I mean, you've got a gold silver ratio of 80 odd. If it was going to be priced properly as money, you'd be looking way below that. I don't think we get back to the sort of Sir Isaac Newton 14.5 ounces of silver to one of gold type thing, but I can easily see this below 30. In this sort of panic. And that does give you, sort of huge outperformance. And of course, the other thing is that while the institutions might be fretting about where the hell we're going to get all this gold, the average investor, the man who feels that he's missed out on the gold run is going to go for silver. He's bound to. Because apart from anything else, he doesn't have to fork out the thick end of $4,000 for an ounce. He can buy an ounce for around about 47, 48. So that is extremely attractive, I think, to most people.
Right now, something historic is happening in the precious metals world, and few are paying attention. The gold-to-silver ratio, once stable near 80-1, is collapsing fast, signaling a violent shift in how global money is being repriced. Just this month, gold smashed above $4,000 an ounce, while silver surged past $47. Its strongest level in over a decade. In China, India, and Europe, silver has already broken its 2011 highs. But in US dollars, it's still lagging. And that, according to Alasdair Macleod, is the biggest opportunity of our generation. Macleod's message is simple. This isn't a price rally, it's a monetary warning. The world is running out of real metal, and the paper system that's been suppressing it can't hold much longer. He says we're standing on the edge of a global revaluation event, one that could send silver soaring while fiat currencies crumble.
So I do see a bit of leverage there. The other thing possibly is, I mean, I think that institutions will go for gold mines and silver mines and so on. And I think the overall mining industry, I think, has been very, very suppressed in terms of its value. If you look at the main indices, they're more or less, talk about mining's, gold mine index or whatever, they're more or less doubled from the bottom, but this is from very, very depressed levels. But it does mean that you've got to have the ability to analyze mines or at least know who to follow, which is probably, what most people will do. That introduces a degree of complexity, as well as that. If you buy into stock shares, whatever, I mean, basically you're buying credit again. And now I know people think that, a company isn't inflation proof, or, it gives you some protection from inflation. But the problem there is that it is still credit, because what you're doing is you're buying into a management promise to give you a stream of dividends. Well, they don't even pay that nowadays. So
you're just treading water then. You're just treading water. You're not doing anything.
Yeah. I think the key to it, Andy, the key to the acceleration in the market is going to be when this credit bubble pops. I think we're within months of it. I mean, in fact, I think it probably happened by the year end. October seems to be, and here we are on the 1st of October, it seems to be a pretty good month for a crisis, for an autumn crisis. Well, that is interesting. The other thing that fascinates me is that the futures market is being used as a means of delivery. I mean, I don't know if you saw, but the stands for delivery yesterday were, I mean, in gold, it was something like 66 tons.
Yes, it was.
Just in one go. Silver was
still
huge.
24 tons, still 24 tons to sell, to deliver.
Yeah. And silver was huge too. I mean, that was 1,500 tons or something. I did work it up. I can't remember what it was. But this is enormous. I mean, what it means is that the gold that's been delivered this year, or stood for delivery, this year has totaled about $950. 950 tons this year alone. And if we're looking at silver, I think the figure is something like 11,500, 12,000 tons. I mean, these are enormous numbers. They really are. And, you're looking at, in the case of silver, you're looking at, something like 58% of global mine production, which is 800 million ounces. I mean, what is going on? I mean, you've got to go and buy a future in order to get your bullion. This quite clearly shows that there's nowhere else you can go and get it. Now, that having said, I do understand that the retail market is slightly different. And there are interesting cross currents there. I mean, I understand that, Krugerrands are readily available and in great big quantity. And when it comes to kilo bars, I mean, you can buy those quite easily, sort of 1, 2, 3, 10, whatever. That's absolutely no problem. But as soon as you go out of beyond that sort of the wealthy retail market, as it were, it then gets extremely difficult, as I understand it. Is that your experience as well?
100%. The larger the size, the more the premium.
So, I mean, this is the way it's going. And, going back to the 1% portfolios is 25,000 tons. I mean, where the hell is it going to come from? I mean, the answer basically is that the gold price measured in fiat is going to spiral out of control. And then, of course, you've got the implication about what is the value of fiat. Now, we all turn around and say, well, is gold going up rather than fiat going down? Yeah, but that's going to force the Chinese, I think, into a situation where they have got to start considering sooner rather than later a gold standard to protect their yuan, because their yuan will be going down along with it. I mean, unless they protect it. And the other thing, which so far nobody, I think, actually understands, is that when you get the end of the fiat currency system, essentially, you're predicting the collapse of their purchasing power.
Across the global market, we're seeing signs of an unfolding silver supply crisis. In September and October, COMEX reported one of its largest physical withdrawals ever. Over 11,000 tons of silver and 950 tons of gold stood for delivery. That's nearly 60% of annual mine supply, drained from the vaults in just months. Meanwhile, central bank demand for gold remains relentless. China, Turkey, and Singapore continue adding tons to their reserves, while Western ETFs show record redemptions as institutions convert paper claims into physical metal. Macleod says this shift proves investors no longer trust the system. He argues that the credit bubble is already cracking. Debt-saturated economies, negative real yields, and collapsing confidence in fiat money have created the perfect setup for a historic metals repricing. When the credit cycle finally snaps, institutions will rush into hard assets, and retail investors, priced out of gold at $4,000, will turn to silver as the people's metal. Macleod warns that the gold-to-silver ratio, now hovering near 75-1, could collapse to 30-1 or even lower, unleashing a parabolic rise in silver's value. He compares today's calm to Weimar Germany, 1922 to 1923, a period when people thought inflation was under control, right before currencies imploded. This time, the dollar will be at the center. As global confidence erodes, China could respond by linking the yuan to gold, forcing a new global standard and isolating Western fiat. This is no longer about speculation. It's about the survival of purchasing power. Macleod believes we're just months away from the moment when the world realizes prices aren't rising. Currencies are collapsing.
Everybody in the investment management industry thinks that, okay, inflation's a bit sticky, but it'll probably come down next year. We're going to get cuts in interest rates. Wrong. Prices are going to rise hugely. But of course, the thing that nobody really appreciates is it's not prices rising, but it's the purchasing power of the currency collapsing. I really do think we're in for a period which looks like replicating what happened in Germany between 1922 and November 1923. We'd already had a post-war decline, a substantial decline in the purchasing power of the Reichsmark. It steadied between 1920 and late 21, when there was a stock market crash. We've got a credit bubble here. That's going to crash. So this is actually a replication, if you like, of end of World War I, end of COVID. Okay? Purchasing power of currencies goes down. In other words, we saw inflation rising, interest rates rose with it. Now it is stabilized. And we've got a lovely period of anybody who's got anything in the stock market is doing wonderfully, thank you very much indeed. Making lots and lots of money with his Nvidia and his Bitcoin and God knows what. That is just absolutely the same as 1920 to 1922, the end of 1921. And what follows, we're about to see. And this is similar. It was the end of the Reichsmark, and it's going to be the end of the dollar and all other fiat currencies that sail with it. And what that means is, if you look at what happened, all the stories about, wheelbarrows full of cash and all the rest of it, and the complete collapse of values, like property, people making money. One way in which you really will make money as a manufacturer is to manufacture to export to Russia. Because Russia will go on a gold standard the moment China does. And what you'll see is your manufacturing costs sinking along with the currency, but your margins protected when you get paid in rubles or yuan. That's what Hugo Stinnes did, the inflation king, back in 1922 to 1923. He became the wealthiest man in the world. His costs were in collapsing Reichsmarks, and his profits were in gold-backed dollars. And he owned something like a quarter of all German industry, when the thing ended. And Fritz Thyssen was another one. Now, Thyssen is a name we know from the steel industry, and that's still around. So this is damn serious. What does it mean, for the gold price? In a sense, it's irrelevant. What's really relevant is the moment people wake up and understand it's not prices going up, but their currency going down, then they will dump their dollar deposits, their credit, if they've got any, just to get the hell out of it, and buy food, buy anything you can get your hands on, because you don't want the damn currency, because it's going to buy even less by the end of the day. That's what we're heading for. It's a horrifying thought.
It is.
I think that this squeeze in the gold market, and also silver, and it won't be just confined to them, because if you look at the value of base metals, they've been left behind hugely in all this. I think that's going to be a big catch-up. The overall consequences of this, I think, are going to hit everybody very, very badly. But it does mean that you've got to hoard gold as much as you can. Silver as well. Of course, the other thing is that governments could be stupid, as they always are, and they decide, we're going to confiscate gold. So keep it away from the government, keep it away from the banks, because the banks will do what they're told by the government. Keep it out from the banks, and don't tell anyone you got it. Silver, I think it would be a lot harder for them to confiscate that. I really do. So that makes silver especially attractive in this collapse scenario. And also, it's probably, I mean, I don't see necessarily that we'll be going out and spending our gold or whatever, because that's not the role of gold, really. What we will do is we will find, our currency, we will liquidate whatever gold we need for currency, whatever its value, as it's needed. And you'll be able to buy a nice big mansion and country estate and all the rest of it for, sort of 10 ounces of gold. That's what happens. But you need to get your Britannias, maybe. I mean, if you can get someone to accept your Britannias, they'll probably bite your hand off, but then you can buy all this.
No capital gains tax either. So
not on that, no, or on sovereigns.
Yeah, which is again amazing, because I sometimes say to people, look,
don't tell Rachel. Don't tell Rachel.
Yeah, exactly. But I think, maybe if you're going to buy a single kilo of gold, why not buy the equivalent in Britannias or in
exactly.
sovereign?
I mean, the premium's only 2 or 3%. It's
I know. It's nothing, absolutely nothing. And then you've not only that, we're living in a communist regime here, and they're coming after anyone that's got any wealth, and we don't even know how that's going to roll out, shortly. But
Alasdair Macleod's warning couldn't be clearer. Get your wealth out of the system now. He urges investors to hold physical gold and silver outside the banking network, because governments and institutions will act to protect themselves first, not you. He reminds viewers that in a collapse, it's not about gold going up, it's about the dollar going down. And in that environment, silver becomes not just a trade, but a shield, harder to confiscate, easier to exchange, and far more explosive when monetary confidence breaks. So here's the question for you. Do you believe the gold-to-silver ratio will crash back to 30-1? And if it does, where will silver's price go next? Will you be holding real metal when the world realizes fiat money has no anchor left? Drop your thoughts in the comments. Let's see how many of you are preparing for this shift. If you found this analysis valuable, smash that like button, subscribe to Metal Watch, and turn on notifications, because the next few months may change everything we know about money. Stay alert, stay informed, and stack wisely.